related queries, because I'm sure that 2026 you will be very excited to make some new purchases as well as to get rid of some of your bad investments that you have made. But definitely you will be having a lot of stock related queries as well. And viewers, just for a recap, you can connect with us live on the WhatsApp number that is on your screen, and throughout the show it will be flashing on the top of your screen. Do write to us, tell us your name, the stock that you have invested in, as well as the stock you wish to invest in, and also tell us the time horizon for which you want to keep that investment with you. Don't forget to mention your name and your location as well. During the show, we'll get some live callers as well. So let's get started. And firstly, let me welcome our special guest for today, who is here to guide us better. And Avinash Gorakshakar is with us on the show. Hi, Avinash. Very good morning. And firstly, Happy New Year to you and your entire team.
Yeah, Shrishti, good morning and Happy New Year to you and Kanishka and the entire 18 Hour team.
Thank you so much for that. But let's get started. Avinash, a lot of these queries have already started trickling in, and let me take the first query that I have. And this one is coming in on ITC. That's the stock that is indeed hammered in trade today. There are reports suggesting that the duty on cigarettes and tobacco products are expected to increase from 1st of February, and that's what the government notification also says. And Avinash, Parish from Bangalore is worried about his investments because he's holding 1,400 shares. Buy price is 417 rupees. But his question is clear. Should he go ahead and buy more in this particular dip for ITC? It's 7% cut right here. Or you believe that it's still a hold or a sell?
No, I think, Shrishti, first of all, the cigarette sector is one sector where the demand is price inelastic. So maybe there is a sentimental kind of negative, for a couple of days. But thereafter, the markets are going to digest this very easily because this cost increase will definitely be passed on to customers. And I think ITC is the largest player in the cigarette market. So I think whatever price, erosion happens because of this duty increase, because of the excise duty increase, I won't be surprised that the company will be passing on this to the customers in the next couple of months. So maybe for the near term, there could be a little bit of margin pressure. But historically, we have seen that whenever any excise duty increase comes in, the company passes on this increase to the customer, and the customers are indifferent. Just like liquor, cigarettes are those kind of products where the compulsion drives them to smoke. So I would say that if the investor has got a 12 to 15-month kind of time frame, around 370, 375 would be a good opportunity to accumulate because fundamentals for ITC remain very strong. It has a cash kitty of almost 15,000 crores, gives very good dividends, and has been one of the leaders in this industry. So I think I would suggest that if he's got a slightly medium term to long term horizon, he can definitely look at buying on the dip.
But moving on to another query, this one is coming from Mohit, who's writing to us from Ludhiana. He has 600 shares of JSW Cement. He's bought it at a price of 137, and he's looking at a very long time horizon, 5 years. Avinash, what do you think? Which one is your preferred bet in the cement space? Is JSW one of them? And are these levels good? He bought it at 137. Do you think he should accumulate more since he's looking at a very long time horizon, 5 years?
JSW Cement can be held on. It's a good, promising bet in the cement sector, and I think the investor has a fairly long time frame in mind. So I think over the next 2 years, hopefully this company will become profitable and will just add a little alpha to his portfolio. But I think rather than putting entire money in companies which have got just listed recently, I would say he should also look at the larger players like Ambuja Cements, which have got the benefit of a large geographical kind of market, a very large capacity built up. So I think overall we are positive on the cement sector. I think both Ambuja and JSW Cement can be held on with a 2-year perspective.
All right, that's the take coming in on select cement counters. But let me move to query then. And this query is coming in from a viewer named Ayush. Okay, just give me a second. Okay, Ayush, this is the query on a long-term view on Tata Motors passenger vehicles. And Avinash, why don't you help Ayush with that, because it has been one of the key underperformers of late on the back of this whole JLR issue. But India business is performing well. JLR expected to bounce back, but is the stock is also expected to bounce back? Your views, and he also wants a long-term view on Railtel.
But I think my guess is that Tata Motors PV looks pretty attractive from a long-term standpoint because, I think quarter three numbers for most of the companies within the two-wheeler and the four-wheeler space are expected to be good. In fact, December numbers have come out, and I think the market is quite positive considering that GST cuts have been announced that has driven a lot of demand for these vehicles. Plus, the rate cuts have happened as a good monsoon which happened this year, so hopefully FY27 should also be a lot better. And typically January to March is a period where a large amount of sales occur for most of the automobile companies. So I think keep the faith and hold on for the next say 12 to 15 months. Tata Motors PV could definitely give a decent risk reward over the next 12 months.
One is I am carrying CG Power around 1000 numbers. My purchase price is around 300 rupees average. Actually, it touched 700 plus also, but as on date, it is around 640. So I just wanted to know what should I do with this.
Okay. And which are the other stocks?
Second query is NOSIL. I am carrying 350 of them. My average purchase price is 196. Now it is at 153 today. But on daily basis, it's going down only. It's not going up at all.
Right.
And number 3 is Tata Chemical.
Right.
Here again, I am carrying 250 number. My purchase price is 887. Here again, yesterday it went up by around 3%. Today again it's down, So these are the three my queries.
Okay.
Kindly help me. Thank you.
Tata Chemical, right? Or Tata Capital?
Tata Chemical.
Okay, okay. So, Avinash, let me come to you first. He has three queries: CG Power, NOSIL and Tata Chemical. In CG Power, he's sitting with a considerable amount of profit, more than double that is. So, do you think he should book out some? CG Power has definitely been a standout within its sector, whether it's the OSAT facility or the kind of order wins it has seen in 2025. What is that... what is it that you are seeing in store for CG Power in 2026? What is your opinion? And on the other two, NOSIL and Tata Chemical. Tata Chemical, of course, is one of those, volatile shares, especially given the kind of tariff hangover that we have seen in the past year. But going forward, what is the expectation for all three of them?
No, I think as far as CG Power is concerned, I would suggest that, since it has not sold out earlier, at least book out 25 to 30% of your quantity and, get remaining shares free. I think long-term prospects for CG3 are definitely looking good. They have a very good order book, and I think the Murugappa group is well known for execution, and definitely long-term prospects are good. As far as NOSIL is concerned, I think there could be some pain for some couple of quarters because the product which they make, rubber chemicals, there's a lot of imports which is happening, and the government and the company has suggested for some anti-dumping duty, which has now come in. So I think some relief could be seen maybe in the December and the March quarter. And the other part is the expansion for NOSIL, where they want to expand their capacity by almost 50% is nearing completion. Hopefully by March this will get completed, and the company continues to remain fairly debt free. So most of the expansion is going to happen via internal accrual. So I think if the investor has held on for such a long time, I would suggest the next 6 to 12 months could be definitely be positive, and it's a well managed company and definitely is related to the auto sector. They have tires as their main customer segment. So I think things should brighten up in the next 6 to 12 months.
And what about Tata Chemical?
According to me, in the near term, will face a little challenge because soda ash prices have been falling considerably. And most importantly, I think until the time globally soda ash prices don't go up, I think you're going to see some margin pressure happening in the December quarter as well as the March quarter. So here, I think probably he'll have to wait for a slightly longer period. If he doesn't want to book a loss, I think 12 to 18 months is something he's got to hold on. Once the turnaround or the cycle in the soda ash market improves, only then we could see a good rebound in the stock. Till that time, the stock will remain an underperformer.
Okay, so you could book some of your profits in CG Power and continue to hold it on for the longer term.
Let me take the next query, and this one is coming from Padmasiva Rao from Bangalore. And Avinash, he's been holding shares of PNB Housing, 15 shares at a price of 850 rupees. Yes, of course, due to that management rejig, there was some bit of a pressure, but now that is through. The stock is quite very excited. What is the future of this stock for the next 1 year? What's your view?
No, I think the stock has stabilized now, and I think looking at the rate cuts which has happened, housing finance market is definitely shaping up well. My sense is that this is a large housing finance player, and more importantly, after the new chairman managing director has come in, I think the market has more or less understood that growth trajectory will continue. Maybe for the next 6 to 12 months, if the investor can hold on, he could definitely expect a price of around 1050, 1100. Numbers are going to be much better in the second half as compared to last year. And hopefully, housing finance is a area where even the government is giving increasing focus. So to that extent, I think you could see some tailwinds happening in the budget also. So till I would suggest continue to hold.
Okay, so a whole call coming on PNB Housing Finance.
Good morning and Happy New Year to you and your entire ET Now team.
Thank you so much.
Yeah, I got 500 stocks of Steel Authority of India at 104. I can hold for the next 2 to 3 years.
Okay, next 2 3 years is what we can still hold on to. And Avinash, what's your take here? He's bought at quite a good price, 104, and he's sitting at handsome profits. But yes, of course, just yesterday we had that whole safeguard duty imposition, and even the steel stocks were shining bright. But for the next 2 3 years, where do you see the stock headed?
No, I think he can continue to hold. The safeguard duty of 12% actually gives a further boost to companies like Steel Authority of India. And I think numbers should be better. In fact, data points which we have received is that the second half is going to be much stronger than the first half of this financial year. So sale can definitely benefit. I think, you could expect a decent rise up to 165, 170. And at that point of time, maybe he could consider booking a little bit of profit, but outlook for the next 12 to 15 months is pretty positive. I think steel prices have moved up after a long time. Construction activity and infrastructure spending in India is growing. So to that extent, I think the demand potential and the outlook continues to be positive.
Right, so the demand potential and outlook over the next 12 to 15 months continues to be positive for.
The next query is on Zaggle Prepaid, wherein Pratik from Udaipur is writing to us, where he's holding around 1,000 shares, an average price of 360 rupees. The stock is currently near the same levels, but he's been holding for the past 4 months. Do you believe that over and above 500 rupees is something that he should look forward to with respect to Zaggle?
See, I think Zaggle Prepaid has a very unique business model and a very strong marquee clientele. In fact, numbers also for quarter two have been quite encouraging. But I think the stock has remained slightly, underperforming. But I think if you look at the opportunity in this space and the kind of unique business model which they have, I think he needs to give in a couple of years before he, gets a kind of alpha which he's expecting. So my sense is next 12 to 18 months, I think he can definitely think of, staying invested here. But don't expect any short-term upside. Maybe in the short term, the stock will remain range bound. But yes, in the longer term, I think he could expect a decent risk reward.
Now, what are your thoughts? Which are the top 3 bets that you are picking for 2026?
No, I think we are also positive on the auto component sector and the hospitality sector. And within that, from the large cap, we like Mahindra and Mahindra. We believe that this is going to be the best outperforming stock for 2026. Our fair value is roughly about 4,000. And I think there are many reasons for this. The tractor business, the utility vehicle business, and the electric business are all doing well. And hopefully, we could see a very strong FY 26-27 also. So I think to that extent, even at these levels, there could be a decent alpha for people who want to buy and invest in this stock. The other company is Shriram Piston and Rings, again an auto component company. Now, what is interesting is they bought an Italian company called Grolin, which is having a very large, top line base of 1,200 crores. Now, this is going to be acquired in the month of January by the company. So this adds a lot of top line as well as profitability for the company. This year, we expect a profit after tax of roughly about 600 crores. and which can go up to roughly 725, 750 crores once this acquisition is fully complete. So, I think around 3,500 is the target price, which I think investors can expect over the next 12 months. And finally, from the hospitality space, one stock which is underperforming, but which is a market leader in its own segment, is Indian Hotels. Very strong fundamentals expected over the next 6 to 12 months. I think the October to March period is supposed to be a busy season for hotel companies. So I think we could expect a fair value of around 875, 900 here. It's a portfolio stock, and I think investors can add on dips, in this stock.
Long-term query yet again from the hotel space. This is Teja writing to us from Nellore. They have 6,000 shares of Trident at a price of 53. They want to hold them for the next 5 years. Significant losses what they are sitting with right now. But in the next 5 years, what kind of return do you think they could have?
I think my guess is Kanishka. This is not a hotel share. This is actually into terry towels and paper. So the sector is different. So I would say that I think on any rise the stock should be sold, because numbers have been pretty weak for the last couple of quarters, and I don't think you're going to see any major improvement in the next 1 or 2 quarters. So I think it's a better bet that they shift to some other sector, something like private banks or maybe PSU banks, where the risk reward could be better. In fact, from the private sector banks, and IDFC First Bank would be better. One could at least see a reasonable risk reward happening over the next, say, 12 months.
That's about Trident.
Avinash, this is Raj Agarwal writing to us from Bengaluru. He has LIC Housing Finance 50 shares at a price of 615 rupees. He's asking what's the outlook? Are the fundamentals strong enough? Right now he is sitting with a loss, but he's willing to hold on to it if it does make sense to hold on to it for the longer term. What are your thoughts?
I think he should hold on. See, the parent is LIC, so I mean, a large part of the business comes from the LIC policy business. But more importantly, housing finance is one segment where we are quite positive. We hope that the December quarter and the March quarter is going to be equally stronger as compared to the first 6 months. And hopefully, if the budget gives a further boost to housing, I think that would be a kicker for the stock. So I think continue to hold, keep a time frame of at least 12 to 15 months.
But Avinash, your thoughts on Ola Electric? Ashraf from Kerala and one of the other viewers has also given his query on Ola, but particularly Ashraf holding over 400 shares, buy price 85 rupees, at a big loss. Hold or sell for the long term?
I think numbers, Shristi, as everyone is aware, have been quite disappointing. So I think unless the investor has got a 2 year kind of time frame, in the short term, it's unlikely that this share is going to outperform. And I think the December quarter numbers are keenly awaited. In case there is some improvement on the volumes and on the margins, then I think you could expect a short term bounce. But otherwise, I think at least 2 years is something the investor needs to hold to make a decent alpha here.
Okay, so that's the view on Ola Electric. But
That I have is on Voltam transformers. We generally don't discuss much about this particular counter, but particularly wherein Suresh from Bangalore is writing to us, he has purchased 28 units of Voltam at a price of 14,220 rupees. Right now, look at the price, it's almost half versus his buy price. What are your thoughts here, Avinash? What really happened with Voltam, and what to do with this one?
No, I think the company is a well-managed company from Gujarat. I think it's a very old transformer player, and I think even the balance sheet is pretty good. It's a debt-free business, very old, marquee customers with them. But I think the stock has been purchased at a very high level, Shrishti, and I think it's better that on any rise, the investor gets out and possibly puts money on the banking or maybe the auto component side. This is a very difficult investment time for the investor, because almost 50% of the capital has got destroyed. So I think it's better to shift on any rise to something like an M&M, or maybe a Shriram Finance, or typically even an IDFC First Bank. I think hopefully over the next 12 to 15 months he can think of recovering his losses.